Welcome back, everyone. As part of our weekly market update, I'm going to be covering some of the biggest headline articles of the week and how it may be impacting the local Bay Area real estate market. In today's docket, we're going to be going over several things. Apple stock soars 7% to record highs after the AI-focused WWDC event. We're going to talk about that momentarily. This Bay Area city was named the best place to raise a family in the U.S. above San Francisco and San Jose. What city may that be? Feel free to take a guess right now. More than a half a dozen small businesses go from pop-up to permanent in downtown San Francisco. Bay Area Gen Zers can expect to spend up to $300,000 on rent by the time they reach age 30? Potentially. California's insurance crisis is devastating the real estate market, commissioner says. I'm going to give you my thoughts on that. Partially true. And last but not least, why is the housing supply so bad in the San Francisco Bay Area? We're going to be hearing from a lot of different, entities and associations as to their reasons. I'm going to give you a little bit of comment of each of them of what's really going on. But I'd love to get your input too. Leave in the comments below. I'd love to get your thoughts as to why things are what they are. Now, if you don't know me already, my name is Spencer Sue. In the last 5 years, I've been able to help over 250 people with their moves. So if you're thinking about buying, selling, investing, or doing anything real estate related, you got to talk to me, and we got to go over a game plan to help you with your moves. But let's go over the headline articles of the week. Number one, the biggest news of the week was Apple. Apple stock soared 7% to record highs after AI-focused WWDC event. People have been waiting for a long time, right? Apple has not been very public in terms of the money and the investments they have been doing related to AI. And to be fair, while Meta and Google and these other companies have been pouring billions and billions of dollars into the platform, Apple has been doing something kind of interesting, right? So they've been kind of just waiting to see what are the real big players that can likely do well. And then they made the partnership with OpenAI. Now, it's not very clear exactly how it will be configured, but the fact that they chose a partner to then potentially make hopefully Siri better, just be a better platform altogether, create reasons why people need to refresh and update their iPhones. Maybe there's additional chips that can be in place when it comes to keeping things localized. There's just so many interesting things that can be done, and that's what sparked a lot of excitement about the company, about what they can do. That being said, they also haven't been spending a ton of money like these other hyperscalers and these other big tech companies in terms of their investments into the product. So we'll see over time if this is the right move or not, but the markets certainly love it. The stock market is doing really well. For a while, they weren't doing that well relative to some of the other big tech companies. But what this means is that a lot of people that have been at Apple, this may be the opportunity for them to be able to sell their stocks, buy a place. Because a lot of people that work at Apple tend to stay at Apple for quite a bit of time. And so this is, I think there's going to be some movement from people that work at Apple of the level of confidence that stock has gone up. Time to potentially buy a place, make a move, sell some stock, things like that. Let's take a look momentarily so you can see for yourself where Apple has been trading. Because take a look at these numbers, right? Let's take a look at Apple's stock chart. Just a huge spike, as I mentioned, about 7% since the announcement. And take a look at this, all-time record highs. So for those that are Apple, this is a great opportunity. They've been kind of like up and down for throughout the year. Let's see if I can try to compare this. Let's see how it compares to the general stock market. So you can see for yourself. Let's just say the last year, right? So Apple has been a laggard for a while for the general index. The general index for a year has been a 24% increase. Just incredible the amount of growth that continues to be pushing. But look at Apple. If it wasn't for that big news of that 7% plus pop, it's been a pretty big laggard. So they're kind of catching up to the general S&P. But overall, this is good news for those that work at Apple, and definitely important news for those that have been considering or making moves in the Bay. And this is maybe a good time for you guys to make that move. But the key is the excitement. What happens for the next refresh? Is there going to be a lot more AI-enabled tools and products in place? I think that's the interesting part. Now, let's talk about the Bay Area city. This Bay Area city was named the best place to raise a family in the U.S. above San Francisco and San Jose. Who is the winner? They've been named this many, many times. Fremont has been named the best place to raise a family in the U.S. thanks to its top-performing schools, safety, and affluence. The beauty of Fremont is this. While there's some companies out there, namely Tesla and some other companies, most of the companies end up to be in the peninsula side or the South Bay side, right? Santa Clara County. However, it's when there's no traffic, it's actually not that far from a lot of these places. Within 30 minutes, you can get to a lot of locations. So location-wise is pretty good, especially if you have the flexibility of work. But what you get there is a combination of things. You get great neighborhoods. You get generally good schools. You get lots of good restaurants out there. Lots of shopping in terms of grocery stores. Like you have all the brands there: Whole Foods, Trader Joe's. You have all the other Asian grocery stores and things like that. So you have plenty of options that are out there, right? And so there's no shortage of places to shop, to hang out, and it has some of the best parks, right? Central Park is one of the biggest parks that you'll find of all the Bay Area. Lots of activity they can do. Tons of people walk around that park. Great for a nice lifestyle. And even though it's more expensive than a lot of other places that are further out, relative speaking, for the money, for those that can afford it, it's a really, really, really good location. And so these are the reasons why Fremont continues to be really that just continues to be that family-friendly, top-rated school, top-rated area because of schools, safety in general. The crime is there significantly less than some of the neighboring areas, but yet it's still a very, very big city, right? Now, I think things will be interesting if Fremont ultimately does have a downtown, because a lot of times the downtown, while it can create a lot of great shopping, great restaurants, and activity, sometimes that brings in some more crime than others. But we'll see. Fremont has always been highly rated and has always done very well. And while cost of living is higher, it's still very, very affordable, especially compared to San Mateo County and Santa Clara County. Juan, good to see you. We got to catch up soon. Really appreciate all of your support as always, and super happy to get you your place. Next, let's talk about small businesses. Right, this has always been the concern. More than a half dozen small businesses go from pop-up to permanent in downtown San Francisco. And we saw a lot of this, especially in downtown Embarcadero, these areas. If you walk by it, there was a lot of places that are like these businesses, and forcing the landlords. You got to remember this. How do pop-ups work? You got to make a deal with the landlord and say, look, I don't know if I'm going to be around for a while. The landlords, quite frankly, don't have that much leverage anyways. Like, do you not want to give this company a try? But as soon as they give them a try, they're doing well and they're selling out, then they may be able to convert that into a longer-term rent. And so you see that that activity happening a lot, especially around the Embarcadero, where there's a lot of pretty good retail space. The buildings itself are newer than some of these other buildings in San Francisco. And so they did a lot of these experimentations throughout the year. And to be fair, because, I mean, good and bad, like a lot of businesses did go under. So now is like an opportunity for those new businesses, especially if people are truly going back to the areas, to be the ones that are still around, right? So that's always exciting. And to be fair too, right? Think about it. They are usually able to renew better leases. And so they're just in a better financial term and environment than actually some of these legacy ones that may not have had the greatest deal. So leave in the comments below, like, what has been your favorite pop-up in San Francisco, number one, and hopefully they've been able to convert to long-term. What are your favorite long-term ones? Leave it in the comments. Now, let's talk about this stat here, right? Bay Area Gen Zers can expect to spend up to $300,000 on rent by the time they reach age 30. Well, let's just kind of break down a little bit of those numbers, right? If you are 21 years old, let's do some math together. If you are 21, people graduate, they get out of college, 21, 22, let's just say 21. So you'll be living and renting, if you were to spend that kind of money, for 9 years, right? 9 years. So if they're saying $300,000 over 9 years, that's equivalent to $33,000 a year. Divide that by 12, equivalent to an average rent of $27.77 a month. Okay, so that's some of the stats that they are saying. If you live in the Bay Area, you may be spending this kind of amount. And this is a conversation I have with a lot of people, which is, when does it make sense to buy if you have the ability to do so? Most people that are watching this on the stream, most people that are considering to buy, if they have been saving some money or they make the kind of incomes that they have been making here, are quite frankly eligible to be buying today. Now, it may not be a single family. It may not be this dream house that you plan to live in forever, but it could be a great starter home, a condo and townhome. And because that's the question, like, take a look at this. In many places, $2,777 is a lot. In some areas, it's actually not that much, right? So if you lived in Mountain View, good luck trying to get a place for that amount. If you rent in Palo Alto, same thing. Imagine if it was a 2-bedroom or a 3-bedroom, right? Good luck with a lot of these numbers. But the key is this. The key is always about, one, take a look at the income by household, right? The general incomes are quite high. So the key is this. There's a few ways to play it. And this is part of the strategy for both sides, as in both a landlord, a homeowner, and also a renter and a tenant. Why are you getting your own place? Right? Like, why are you then spending the amount that you're spending? You can live in Mountain View for a 1-bedroom, probably for like plus or minus $3,500 to $4,000. Alternatively, you can also rent out a room in a townhome, and some of these townhomes are newer anyways, for significantly less, $1,200, $1,500, right? So that's significant amount of, remember, this is all post-tax savings. So the objective to be able to have post-tax savings is so important, because that can be your powder and your earnings to be able to then generate, to be able to put a down payment to get out of this rent column. Because think about it, right now, because interest rates are high, that also means your savings rates are very high. You can get you can put your money in the money market account to get 5% interest today. You can, generally, the stock market you saw within the year has increased 24%. Now, that's not common, but in general, the stock market has gone up about 10% a year, right? So there's all these ways that you can just passively invest. We're not even saying you're going to be the best stock picker or the best market timer. Just being in the market will allow you to do well. So like these are the real strategies that are in place. But also think about the reverse side. If you're a landlord and you're single, or you are okay sharing a place with others, that's also a way for you to also subsidize your mortgage during this time. Because during this time, as a Gen Zer, if you're living up to 30 years old, this is the prime time to be able to do these kind of co-living, co-sharing kind of setups, right? Because think about it, if you have more established relationships, if you make more money, if you have kids, if you don't want roommates, like this stuff will not last the entire time. Some of the most successful people that I've seen has done this strategy to be able to get into their own place, be very, very manageable on their payments, still have the entertainment and livelihood, right, of a roommate, and allow them to be able to get into a place and also just help with their monthly payments. So in general, that's been a very, very positive strategy for a lot of people when it comes to achieving home ownership, but also to reduce the amount that they're renting. Now, of course, if you want the fine life of living in your own place, and there are no shortage of places that will be happy to charge you $4,000, $6,000, $8,000 a month. But if your ultimate goal is to buy a house, some adjustments need to be made. They're not like real sacrifices. Some adjustments need to be made, and then you'll be able to accelerate those goals of owning a place, starting with something that's manageable. Now, let's talk about the last two topics. California's insurance crisis is devastating, the real estate market commissioner says. It's having a devastating effect on its real estate market, particularly affordable housing. This, I would say, is definitely true, right? Because think about this. Think about insurance. Buying a $1 million home versus buying a $4 million home, is insurance actually 4x that amount? The answer is no, right? The insurance has a flooring. It also has generally a ceiling. And the reason is this. The cost of building, cost of construction is not multiples based off of how much you bought it for, right? So think about it. If you were buying a place in Los Altos, great place. Let's say the home is $4 million. The value has always been in the land. So, but the cost of construction is not 4x if you go from Los Altos to a San Jose, right? The cost of construction may be just a few percent, like maybe 10-15% off. If it really is, if you shop with other people, it could be the exact same amount. And so these different things are so important, because that is absolutely true, where because of the flooring of insurance is a little bit more expensive, that can impact those that are trying to get their first home. So that is true. The other thing that is true is those that are living in places like in the hills. So some very good areas that people would have loved to be in, and you may not even think about, like, there it's so fire prone. So even places like in the hills of like a Hillsborough, like, even though there's a lot of housing there's a lot of trees, and there's a lot of nature out in that area, but that's part of the charm. You wouldn't think that's like that dangerous versus if it was like Tahoe or something, right, where it's literally just surrounded by all trees and there's very few houses in between. But those areas can be impacted significantly, right? Like, those insurance premiums I've seen can be $10,000 a year, and previously it was about $3,000-4,000. Now, the fortunate aspect is, at least in Hillsborough, those places are very premium already, so the cost of insurance doesn't actually make that drastic of an impact. But imagine if you're living in some areas like a Los Gatos. Los Gatos, the most expensive homes are those around downtown, like in the kind of the city suburbs lives. But there's a lot of homes in Los Gatos that are way in the hills. Like, those homes could be $1 million to 1.5. They're significantly less than the medium ones. Well, the thing is, one, it was already hard to get to the house to begin with. And two, imagine if you can't get insurance or the insurance premiums are higher. So those are the things that are significantly more impactful when it comes to this. So it makes sense of what the commissioner is trying to do, which is saying, look, if this does not get resolved or does not get better very soon, real estate will continue to do very poorly. It's not really impacting it from that perspective, but you got to understand, like, how they're going to play the game. And the reality is this: I would love to have this resolved. They got to definitely get this in place, because it's not doing anybody any good, right? Like, this kind of jostling back and forth is not good for anybody. But the question is, what is that balance, right? Obviously, insurance providers are like, look, I feel like I'm overexposed. The state commissioner is like, look, you're charging too much anyways. Something's got to give. Something's got to give. And I don't know the real answer to that. Let's talk about the last thing. So important. Why the housing supply is so bad in the San Francisco Bay Area. So there's a lot of different people that talk about this, and let's just kind of go over some of their opinions. What are the key barriers to increasing the housing stock in the Bay Area? So this is from the Chan Zuckerberg Initiative. I think there's a huge lack of public and political will for housing, and in particular for housing solutions. This shows up in different ways, like NIMBYism and negative headlines, and manifest into our everyday public discourse and the way we think about housing. If we are just talking about these issues, then we're not talking about fixing the housing crisis. If we do, we talk about the solutions. I agree. I think there's a lot of things there. And the question is always this too. It's a tricky thing, because people want to build where all the jobs are and where the activity is. But that's also the places that have the least amount of space to be able to do it, right? Like, think about places like Dublin that have been growing a lot, Livermore, the whole tract. Like, they've been able to build a lot because they've also had a lot of land. So the question is, can there be a joint thing, whether it's public infrastructure that can be expanded in certain areas? Because there are certain areas that have just a lot more land than other places, but they're just trying to jam more housing into areas that just doesn't have that much land to begin with. But there are solutions. The solutions is to build very high and build towers, right? Think about it. You can't just get a single family homeowner and be like, we're going to force you to sell your place and then rezone it. Like, that doesn't work. So you gotta use the existing ones more. But the existing ones, there's only so many of those anyways. So the question is there a real big problem to be able to build skyscrapers? Right? Like, why are we think about where most of these new construction are, by the way. Generally, there's a lot of conversion happening across El Camino Real if you're in the peninsula side. So let's talk about that first. If you're on El Camino Real, the peninsula side, most of it is only going to be along that line. So, but they're allowing a lot of higher density for that, because especially a lot of them are close to the Caltrain. But the question is, why is it only so high? Like, what? As in, what? Like, most of them are only like four or five stories. There's a cap of it. Why can't it be much higher? Right? It's the same plot of land. If it can be a 10-story, 20-story, these kind of places, that obviously can have a whole lot more housing. The cost of construction will be less too because you're building up. You're using the same plots, right? Because a lot of the expenses are the initial acquisition of the land. But if you can now build 2x, 3x, the cost is less, right? So those are easy solutions. Now think about this. A lot of places in Asia are this way. Like we went to Malaysia not long ago. You can see all across Asia is this way. They build skyscrapers. They don't care about, there are still a lot of little villas, right? But they build these big skyscrapers. And that's a really easy way for people to be able to get into their first place. Now, the value of these other ones, like townhome, single family, will continue to do well because that asset doesn't keep expanding, but at least it gets a lot more people into that very first property. So that's number one. Let's talk about this, Andrew, related to Metro Transportation Commission. What we've seen over the decades, regulatory burdens that have just added onto the challenges, especially of developing good housing, makes it more difficult, more expensive. We've also seen quite a bit of investor expectation. So all of this can be solved, but it is definitely the regulatory burdens because there is a reason they can't build higher. There is a cap. So you got to figure out and resolve that. Like, why is that still there? CEO Housing Trust Silicon Valley, right? We live in a region of abundance. It's a region that has grown. We have innovation happening on a daily basis. Yeah, we have not kept them in terms of balance between jobs and housing. We have underinvested in housing for decades, especially affordable housing. We have a system that's very disjointed. It takes too long for developers to be able to go. That is very true. It's very slow. Well, let me challenge this a little bit too. Is it really that slow? Because think about this. Think about the areas that have a lot of building. Think about San Francisco. San Francisco has a lot of new construction homes that are there. Now, if some of these costs can be a lot less, that will be better. But they actually have a lot of projects. And they have a lot of projects that are on hold because the value of them has not done as well. But make no mistake, there's a decent amount of projects all throughout the city just through the last several years. Now, yes, could those things help accelerate? The answer is yes. But the demand is certainly there. The question is, will the builders want to do it? And many of they can do it, especially if you can build it more dense. So the solution of a lot of this is the regulatory burdens. I know they're the exact amount, but the question is, why is it really that kind of height? Why can't it be significantly more? Like, what is the real reason for this? Because that can change and help a lot. Now, of course, that would cause people to lose their views. That would cause maybe reflection. There's all these things. But at the end of the day, if you really want to do something about this, they gotta be very proactive. They gotta be very active in that. But one of the biggest things is this, and this is a thing that you see in really good areas. So if you talk about permits and you talk about zoning, right? How tall you can build, what areas you can do this for. The key issue is this. The key blend is the good areas have very, very vocal people that will be protesting against this. But who are these people that can dictate this to begin with, right? They're the people that are locally elected. And so when you have this kind of tie, it's very, very difficult for it'll be a political suicide, right? It'll be political suicide for them to get into the next position that they want or to even get renewed if they were going against a lot of people that don't want this to be built. So this is a problem. So the key is there has to either be an override. I know the state has been trying to do different things related to penalties. So these are things that the question mark is in place is how can this really be done? And that I don't have the exact answer, but you can see high level, there are other areas that have proven examples that this can be certainly resolved. Now, there's a bunch of other comments. I don't want to go through all of them, but the idea is this. I think high level, there are many good examples of other areas that have done it well, right? It may be not good short term for those existing people that own condos, but that's kind of it. Like you got to make a sacrifice. You either can want things to keep going up, in which is a control of a demand side of things, control the supply amount of things, or you service a lot more people, which is a inventory thing. And it's how do you motivate people, builders, investors to do it? And that is very simple. Allow more to be able to be built, and you will then be able to generate more for that piece of land. Well, I hope all of this was very helpful. If you want to go over a game plan, I would love to set up a strategy call with you. 408-547-4590. Things are still very active right now in the summertime. The stock market has still roared all-time record highs. Some people are taking some of that money away from the stock market into housing. and you may like to do the same. Talk to you soon. See you the next one. Bye now.